So pre-firm, post-firm, I can't talk about those too much because that's usually where we get a lot of our misratings, is determining whether or not a structure is pre-firm, post-firm. Remember we talked about the community status list that shows the initial flood insurance rate map. And you compare the date of construction to that date. For elevation certificates, pre-firm structures are optional. If they work, fine, we'll take that and we'll use that to rate it. If they're below base flood and eligible for subsidized ratings, the elevation certificate is not going to hurt them. But if it's a post-firm building and it was built in a special flood hazard area, the rate is going to be based on that elevation difference. So one of the things that I've been doing for years, and I've worked in this program for 4 decades now, I use a timeline situation. So one of the things that I haven't mentioned yet when determining pre-firm, post-firm is something that we call the static date. And that comes to us from, again, a piece of legislation from 1973. And that legislation said communities were going to give you until December 31st of 1974 to come into the National Flood Insurance Program, to adopt flood insurance regulations if FEMA has provided you flood maps. And for those structures that are built before the date, before 12/31/74, before the initial flood insurance rate map, we're going to allow subsidized rates to apply to that building. And if you remember, that's about 30 to 35% of the actual cost. So when you're looking at a community and you look at the community status list and you look at when the initial flood insurance rate map, then you determine what that date is. So if you look at this one for the city of Inglewood, they've been in the National Flood Insurance Program before December 31st of 1974. So that particular community was doing floodplain management when floodplain management wasn't cool. So there were structures within that time frame that could be compliant and be treated as post-firm rated structures. For structures that are built after that 12/31/1974 date, then we have to look at the date that it came into the National Flood Insurance Program. So kind of 12/31/74 goes away. Now we look at what the initial flood insurance rate map date was, or that the community adopted, and the date of construction. So if it was built before that date, it's pre-firm. If it's built after that date, it's post-firm. That never changes. So what happens when we have a map revision? Does that change that pre-firm, post-firm date? And the answer to that is no. It just changes the standard on how future structures are being built. So if you've got a structure that was built in a low to moderate risk flood zone, and then it was moved into a special flood hazard area, it was built in compliance to that. And that's where our grandfather rule comes in to the National Flood Insurance Program. So it's important that you look at each and every structure and compare the pre-firm, post-firm date, because each structure for rating is going to be unique. So I talked about just like in our elevation certificate, in our rating, we also round to the nearest whole foot, or we round to the nearest whole dollar. In our contents location, it's considered to be throughout the entire building. For floodproofing, to qualify for floodproofing, it's got to be built 1 foot above the base flood elevation for us to take that floodproofing into consideration. So in floodproofing structures, again, the higher you go, the lower the premium. In an unnumbered A zone where we've not established base floods, 2 feet is the break. If a community establishes base floods, all the more better because we have a different rating based on that elevation difference. The higher you go, the lower the premium. But there are other rating situations that you as an agent may be dealing with. So let's cover those real quick. The first one is on tentative rating. On tentative rating, that's where we don't have all of the underwriting information. Maybe the occupancy has not been completed. So what we'll do is we'll take the premium, and we'll look at what the tentative rates are, what information is provided there, take the premium by coverage based on the tentative rates, and then we'll issue the policy. And then the agent has a certain period of time in order to get that underwriting information. Then we've got provisional rates. Provisional rates, and both of these situations are quite high. Provisional rates are when we don't have the elevation certificate to verify the numbers that are on there. Then we've got submit for rate. In our recent flood insurance manuals, you're able to rate flood insurance policies even to a -15, but we call those submit for rate. We have a specific rating guide that you can download, very similar to the flood insurance manual, that talks about how we specifically rate structures that are below the base flood elevation. So what happens when you've got a building located in more than one zone? In this case, it goes to the more hazardous flood zone. So if you've got a zone that's in an X and an A, then your rating's going to be based on the A zone and what's associated with that A zone. Those, however, are good examples. That might be eligible for the letter of map change process when you've got them in the X and an A zone. It always takes the highest risk zone for rating. Talked a little bit about grandfather, structures that were built in compliance or policies that were written prior to the structure being moved into special flood hazard areas. So policies written on a structure in a B, a C, or an X zone. Continuous coverage. Grandfathering, you have limited opportunities to lock in the zone. We have some scenarios that we're going to talk about here shortly on what happens with map changes where the zones are changing and what are the opportunities to lock in those flood zones. PRP, structures located in B, C, and X zones, package policies up to the maximum limits of coverage. Very easy to rate, very easy to write, and peace of mind for those structures that are at low to moderate risk for flood damage. Newly mapped are those structures that are moved from a B, C, and X to a special flood hazard area. This is new as a result of recent legislation. It's a slower way to reach financial soundness in the NFIP instead of going what the Reform Act of 2012 tried to do is immediately go to actuarial rating. Let's talk now about a different type of building that you as an agent are going to be looking at, and those are what we call accessories, or commonly called appurtenant structures. So let's define them and look at some examples, and then how do we insure those? And what are the insurance implications? So an appurtenant structure or an accessory structure, start with an appurtenant structure, means a structure that which is on the same parcel of property as the principal structure to be insured, and the use of it is incidental to the principal structure, and that is by definition in our Code of Federal Regulations. So we're looking at maybe a garage, might be an example of an appurtenant structure. And then one of our technical bulletins, 7-93, it addresses accessory structures as used solely for parking or limited storage. So in parking could be, again, the detached garage, or storage could be a small, low-cost shed. So under the policy, if it is a detached garage, we can insure it one of two ways. We can move 10% of the building coverage over to the garage, or if the garage is valued at more than that 10%, or if we really don't want to take the 10% away from the house, you can insure it as a separate structure. It then becomes a non-residential building and subject to all non-residential applications on this. So in the graphics you see the shed that's in the back that may be on skids. In order for it to be insured, it's got to be on a permanent foundation. So in the bottom graphic on this, you see a garage that's attached through a roof line. Remember I talked about additions and extensions on an earlier slide, and one of the ways we can extend the coverage from the dwelling is through roof line, an elevated walkway, or solid exterior wall. Well, this is a roof line. It can be insured separately as a non-residential structure, or it can be grouped with the main structure. So what are the insurance implications? The accessory building will be risk rated based on its own merits. It can either be insured separately or as part of the building if it's a detached garage. So if it's a shed, if it's a barn, it's going to have to stand on its own and be rated based on its own merits. Okay, so for submit for rate for those structures where the lowest floor is below the base flood elevation and you can't rate it through the flood insurance manual, or you need to add extra ratings to the premium, we have that specific rate guide that that's just like the flood insurance manual. We call that submit for rate. And in a submit for rate, there's certain documentation that you're going to need to submit with that application. So you're still going to need the application, you're still going to need the photos, you're still going to need the elevation certificate. Did the community issue a variance to be built below the base flood elevation? What's the square footage? A lot of that information is going to be on the elevation certificate, but let's be sure we've got the accurate information. What kind of machinery and equipment is there, and what's the value of it? We need a statement from the property owner as to the year the structure was built or the enclosure was built. Then if it's got masonry walls, then we need to have a letter from the community official, a list of the machinery and equipment that's located in the basement and its value. Then we'll need a signed elevation determination form, and if it's in a V-zone, there's a whole V-zone certification that must be signed and completed by an engineer. And we'll use, sometimes that V-zone certification may actually give it a better rate than using the standard submit for rate. So it's a very important document if you're working on a structure that's in a coastal community in a V-zone. A lot of people think, just like any insurance policy, you can cancel it for whatever reason. Not for flood. Flood insurance policy can only be canceled or nullified for a very limited list of valid reasons. The maintenance of flood insurance is very important, and we do need to have documentation in order to be able to process that. We have some reasons that that are just come right out. Building was sold. We need to be able to cancel the policy. But if the policy holder gets through hurricane season and they say, I don't want the policy anymore, we can't cancel policy just because the property owner wants to. It has to go to expiration. Of course, if there's a mortgage company on there, we're going to need a signed letter from the mortgage company that says it's okay to cancel that policy. But if the property owner is still owning the property, maybe the loan has been paid off, it's that maintenance of flood insurance is very important. It doesn't change the risk. The risk is still there. Just the mandatory purchase of flood insurance has been lifted. So it's still subject to flooding, and property owners need to understand the mandatory purchase does not equate to risk. So I talked earlier about repetitive loss when we were dealing with the increased cost of compliance coverage. So we have some structures out there, and they're in all states, that we call severe repetitive loss properties. That means under certain conditions they have received 2 losses more than the value of the property, or have had 4 losses more than $5,000 each. Those properties tend to drain or repeat flood over and over and over again. So our strategy is to minimize damage caused by repetitive flooding. So as policies renew and when claims occur, these policies are moved into one location so that we can monitor and mitigate those severe repetitive losses, so that it won't be draining the NFIP fund. So several years ago, it was decided by FEMA that we wanted all the severe repetitive loss to be handled by the direct servicing agent. So we had all of the policies moved over that met the eligibility, moved over to the direct side, and they monitor mitigation activities for FEMA from that facility. And as properties meet that criteria, at the next renewal, those structures are moved over. When the mitigation methods have been approved and have been actions have been taken, then the property can be removed from the special direct facility and go to wherever the insurance agent wants to write the policy, even if it's back to one of the write your own companies that agent now handles. And that will occur at the next renewal also. So it never really comes off of the list. We just show that the structure is mitigated. And if a structure, if it's mitigated, has another loss, it stays in the special direct facility and will not be returned to the former carrier or to the carrier in which that insurance agent is now writing flood insurance.